I'd like to start off by welcoming you to our presentation today called Turning Divorce into a Strategic Business Opportunity. What I want to do is I want to explore the untapped, if you will, potential that divorce presents for real estate and mortgage professionals. I am not pitching any specific program today. This is not a sales webinar. My entire focus is on showing you the true opportunities in family law as a real estate or as a mortgage professional. I think, when we talk about divorce, we all think we understand the divorce market. People get divorced and then they either sell or maybe refinance the house. That's the transactional side of this business. But sometimes you need to step beyond the familiar boundaries and view things from a fresh perspective to truly recognize the value and opportunities that are there for us. This isn't just about transactions. It's about discovering that overlooked opportunity that allows us to expand our expertise and position ourselves as a true trusted resource for our divorcing clients, as well as their professional divorce team. In case you're wondering who the heck we are and where we fit into this divorce picture, the Divorce Lending Association is the only association in the combined focus area of divorce real estate, mortgage planning, and mediation. For over a decade, we've actually set the industry standards through training and certification programs that actually empower professionals to navigate the complexities of divorce surrounding real property and mortgage financing. We have an active allied professional membership, which gives our family law professionals, which includes attorneys, mediators, financial planners, coaches, valuation experts, you got it. There's so many more. It gives them a resource to not only complete their continuing education requirements, but it gives them a community where they too can find strategies and solutions for their clients. And as an association, it allows us all to partner with other trained and knowledge professionals. The DLA, we've been featured in Forbes, Scotsman, Inman. We've partnered with organizations like the Institute Divorce Financial Analysts, the CFP Board, and other associations like the Amicable Divorce Network. And as we look ahead, our organization is committed to providing the knowledge and resources that professionals need to help clients navigate divorce much more smoothly than the rough road that it usually is. So together, what we do is we really focus on shaping the future of divorce mortgage planning and real estate mediation. I'm Jody Bruns. I'm the president and founder of the Divorce Lending Association, and I bring over 35 years of practical experience in finance and mortgage origination to the table. I'm also a certified mediator. I'm a mediator trainer. And a few years before creating and authoring the CDLP certification, I personally expanded my mortgage career into the divorce space following my own divorce. Interestingly, I was working in the Chicago market at the time, and I was meeting with a group of attorneys there. And they're the ones that actually encouraged me to write a national curriculum for the mortgage industry one day after I presented at the Chicago Bar Association. What they said to me was that they appreciated my educational approach, and they recognized that there were so many errors made and so many things overlooked. And that's why we needed some type of program out there to tighten up the ship, if you will. And now, 10 years later, the CDLP, Certified Divorce Lending Professional, has become the most recognized and respected designation in the mortgage space. And I think it's important to note my achievements, not for me to gloat or pat myself on the back, but because who you work with really does matter. So I want to thank you guys personally for joining us today, and I look forward to sharing some insight into the divorce market and the opportunities that are there with you. As I mentioned, my objective today is to pull back the curtains on how to turn divorce into a strategic business opportunity. First, we'll begin with an overview of the divorce market itself. Divorce is not just a legal process, it's a life event, often involving significant financial and housing decisions. These decisions, they can be complex, they can be emotionally charged, which makes it critical for homeowners going through divorce to get the proper guidance. Next, we're going to explore the collaboration opportunities that are available to mortgage professionals, real estate professionals, and others. Divorce cases, they require a multifaceted approach, and creating partnerships with other professionals is much easier than you think. I've already mentioned several of them, but you have attorneys, financial planners, mediators, there's attorneys for children, there's counselors, there's coaches, there's real estate professionals, mortgage professionals, appraisers, so many people. Their, what do I want to call it? Their professional reach expands over and overlaps each other, especially in the divorce space. And these partnerships and the value that you bring, it really strengthens your network and it positions you as a trusted expert in divorce-related cases that involve real property and mortgage financing. And then lastly, we're going to discuss the value proposition of serving divorcing homeowners, because they do face unique challenges beyond typical real estate or mortgage transactions. There's challenges, if you will, that go from understanding the financial implications of dividing marital property to securing new housing arrangements. Divorcing clients need professionals from various fields to help them successfully get through and finish this divorce journey. So by stepping into this space of divorce, you can provide critical support while growing your business in a very high demand niche. So throughout today's presentation, I hope that you will gain some insight into leveraging these opportunities and positioning yourself as a leader in the divorce market. I want to break down the divorce market itself, because there are so many different ways to look at divorce statistics. And that's why when you research or you Google the current divorce rate, you will see numbers all over the place. But I want to spend a few minutes on this topic because it is pretty eye-opening, and it really does change your perspective on the overall opportunities that are out there. So one of the challenging issues with divorce rates is that they typically lag by about 2 years. And according to the CDC, the most recent divorce rate in the United States is 2.4 per 1,000 population. However, that statistic only includes data from 45 reporting states and Washington, D.C. One major non-reporting state is California. The latest divorce rate in California is around 5.88% per 1,000 people. So if we take those numbers into account as well, the overall divorce rate is likely higher than the reported 2.4 per 1,000. So let's look at the growing trend of the gray divorce, which refers to divorces among people aged 50 and older. Since 1990, the gray divorce rate has doubled. And for those over the age of 65 and older, it has tripled. And they say that by the time it reached 2019, 36% of all divorces involved somebody over the age of 50. And it's also predicted that by 2030, which if you think about is only 6 years from now, the gray divorce rates are going to be even higher. The military. In the US military, the divorce rate fluctuates between 3% and 3.1%. depending on the branch and other demographic factors. Interestingly enough, female service members have a significantly higher divorce rate than their male counterparts, with rates reaching up to 6.5% in some cases. Veterans, particularly combat veterans, often face even higher divorce rates. Now, the reason I bring up both the gray divorce and the military divorce is for those of you who focus on reverse mortgages, for example, or maybe you're a senior housing specialist, or you love working with veterans and VA loans, then you should understand that there are many opportunities to help these groups going through divorce as well. But for today's discussion, let's use the CDC's reported divorce rate of 2.4 per 1,000. The current US population is around 346 million. That equates to about 830,400 divorces every year. We have found at the Divorce Lending Association that 65 to 70% of all divorces involve real property, which means that there are over 581,000 divorces every single year in the United States that involve real estate, whether they're refinancing, selling the house, or just keeping the property. If you think about it, in 2023, approximately a little over 4 million existing homes were sold in the United States. To give you a sense of scale, divorces involving real property are equivalent to about 15% of those existing home sales. Now, that doesn't mean 15% of those 4 million sales were divorce related, because not all divorces involve selling the house. But what it does is it provides a valuable comparison for you, all right? For even more context, there were around 668,000 new home sales in 2023. Again, highlighting the volume of potential divorces involving real property of that $581,000 divorces with real estate for comparison. So the divorce market is no small potato. It's not small. And if you're considering entering this market, then you need to understand just how significant the opportunities are. And I know that national numbers are good to know, but from an individual standpoint, narrowing those opportunities down to your local market is even more important to understand. We have a national worksheet that we put together on each MSA by state. What it does is it considers each state's most recent divorce rates, not the overall average of the national number, but each individual state's divorce rates. And I wanted to share some of these MSA numbers with you to give you a clear understanding of just how unsaturated and underserved the divorce market is. What we've done is taken the population of each MSA, we've calculated the average number of divorces per MSA with state-specific divorce rates, and then calculated the average number of divorces using our 70% figure of all divorces involving real property. Next, if we had a goal of each CDLP per MSA to receive 10 divorce case referrals each month, and assuming that these CDLPs only captured 50% of that market share. In my opinion, that number should be much higher. But if we consider that what we've allocated for our CDLPs, if they only captured 50% of that market share, then the last column on this worksheet shows just how many CDLPs could effectively serve in each MSA without even stepping on each other's toes. That's how big this market is. And I know for a fact that each of these MSAs is underserved, and there is a huge market opportunity for any mortgage and real estate professional in every MSA throughout the United States to make an impact on divorcing homeowners and their lives. So let's just look at a few of these MSAs. Arizona. The estimated population of the Phoenix area alone is 4.85 million. There is a divorce rate of 2.3 per 1,000, which equates to over 11,000 divorces annually. 7,800 of those divorces involve real property, and an opportunity for a minimum of 33 divorce mortgage planners at 50% market share in that area alone. You can see that California offers an enormous opportunity to serve. Miami, Fort Lauderdale area, 56 CDLPs in that area alone and would never step on each other's toes. Chicago, over 7,200 divorces with real property every single year. Oklahoma City, almost 3,700 divorces with real estate and room for 15 CDLPs. Dallas and Houston, an opportunity for 40. Washington, D.C. and Virginia, 49. I cannot overstate the opportunities that are available for building a business focused on serving divorcing homeowners and their professional divorce teams. As a real estate and mortgage professional working in the divorce space, you bring much more to the table than just the ability to buy or sell homes or provide financing. Your value proposition goes far beyond the traditional paths of real estate and mortgage transactions. It's about offering specialized knowledge and tailored solutions that address the unique complexities of each divorce case, because there are no two divorces alike. When working with divorcing homeowners, you're not just navigating a standard transaction. You're helping clients manage one of the most emotionally and financially challenging transitions of their lives. And this requires a deeper understanding of how divorce impacts real estate decisions, mortgage qualifications, and long-term financial planning. It's your expertise in divorce-specific scenarios, such as managing buyout options, determining property valuations, and undergoing and understanding legal and financial frameworks. All of this specialized knowledge positions you as a critical partner for your clients and the professionals supporting them. You truly do. You become the go-to expert when it comes to helping attorneys, mediators, the financial planners. If you can help them ensure that their clients' housing and financial needs are met, I will tell you that the loyalty in this industry cannot be matched. I haven't worked in the Chicago market for, I don't know, maybe 10 years, but I still get referrals there. I still get referrals from attorneys and financial advisors that I work with in the Denver market, and I haven't been there for a while. The opportunity here in the divorce market, it isn't just for your clients. It's for your business too. By offering these specialized solutions and strategies, you really are able to differentiate yourself from other professionals in the market. And it's this niche expertise, if you will, that allows you to expand and grow your network, attract high quality referrals, and ultimately drive what we all crave is sustainable growth for your real estate or your mortgage business. I will tell you that by embracing this unique value proposition, you're not just providing a service. You're positioning yourself as a strategic partner. And in doing so, you're setting the foundation for long-term success. And I will tell you, it is not an easy, just everyone can jump into market. It's a highly specialized and in-demand market. So I have a lot of members at the Divorce Lending Association where they actually limit their business in the mortgage and the real estate sphere. They limit it strictly to family law, or they add family law as another focus area. But the industry has so many opportunities that you truly could focus strictly on your family law cases. So while the statistics, highlight significant opportunities for growing your divorce real estate or mortgage business, the true potential lies beyond those numbers. The biggest opportunity is guiding and helping someone through one of life's most challenging transitions. It's not the transactions. Divorcing homeowners, they're navigating not just financial and housing decisions, but very profound emotional changes as well. And by stepping into their journey, you provide more than just professional services. You offer support, you offer understanding, and your expertise during this pivotal moment in their lives. So it is essential to remember that the human element remains paramount, amidst the business opportunities that are there. There's a saying that resonates deeply in our field, in the family law field. That saying is that an attorney won't care about how much you know until they know how much you care. All right. This statement highlights the importance of building genuine relationships and you being able to demonstrate empathy and commitment to your client's well-being. They are not just a transaction. This is not your normal, everyday, run-of-the-mill buyer, seller, or mortgage client. You need to keep a hold of this fundamental truth of empathy and commitment to helping them as you expand your presence in the divorce market, because your ability to care and connect with clients is what will set you apart and is what will foster trust and the long-lasting partnerships with the family law professionals. By focusing on both the strategic business opportunities and the meaningful impact that you can make, you will position yourself as a trusted expert who truly understands and supports divorcing homeowners through their entire journey. I do want to point out, because I've talked about all kinds of opportunities so far, I want to talk about what divorce is not. Divorce is not a shiny new object. It's not a quick fix to your business. It's not a shortcut to rate-proof your mortgage business. It's not about, accessing a whole list of fast home listings or maximizing your short-term profits. And for anyone to tell you it is, well, that just shows how out of touch they are with family law issues and puts truly a black eye on our industry. If you think that you can just go, temporarily even market to divorce attorneys because rates are high, they're coming down, but, still our mortgage industry and the real estate industries have changed. It's not a temporary fix for your business. That's what gives us that black eye. Working with divorcing homeowners requires something more meaningful. It requires dedication to your client's future, not just to your bottom line. It's about guiding them through complex financial and emotional decisions with empathy and expertise. Committing to truly serving your clients long-term and their well-being will build trust, it will deepen your relationships, and ultimately, it will help you grow a sustainable and thriving business, regardless of what's going on in the real estate industry, regardless of inventory, regardless of rate. Remember, this work isn't just transactional, it's transformational. Your clients are counting on you to help them build a better tomorrow. So let's talk about the collaboration opportunities. Collaboration is key when working in the divorce space. By building partnerships with various divorce professionals, again, you have attorneys, financial mediators, coaches, etc., You expand your professional network and position yourself as that trusted expert. These relationships, like I've already mentioned, they create long-term growth opportunities and loyalty. But you can't just approach these professionals with the concept of selling or financing homes. To truly build successful partnerships, you need to understand the distinct value proposition you bring to each type of partner and even their specific focus on the divorce process. For example, divorce attorneys, they primarily focus on a case's legal aspects, right? By partnering with them, you can offer insight into how a real estate transaction or a mortgage decision can impact their client's financial future. Even more often is how these decisions conflict with what's actually possible. So, for example, very few family law attorneys are aware of the default effect of divorce on title vesting. That default effect can be devastating from a estate and legal planning aspect, or how specific details of the real property itself can actually limit what mortgage financing is available. And this has nothing to do with the borrower's qualifications. The attorneys appreciate this expertise you bring because it supports their goal of securing the best outcome for their clients. And financial advisors, obviously, they work to secure their clients' financial well-being. You can assist them by providing detailed knowledge of how real estate assets and mortgage options can be structured to help maintain stability post-divorce, or even protect clients from specific tax implications regarding the property and financing because of divorce. It's this type of collaboration that helps financial advisors develop even more comprehensive plans for their clients and their futures. Financial advisors, they do numbers. They calculate debt to income, but they calculate it from a cash flow perspective. They don't calculate it from a qualifying income perspective like we do. We all do different things. So we have to understand the unique value that we bring each one of them. Mediators, when you're working with a mediator and the divorcing couple is in mediation and they call you up and they say, hey, Tom, I'm meeting with John and Jane Smith right now. We're in mediation. Can we ask you some questions? Or we're meeting tomorrow. Are you able to come to mediation with us? It happens, all right? Your role in mediation becomes one of support in facilitating property settlements, negotiations, everything that both parties are trying to consider and wrap their arms around regarding their long-term housing and financial needs. It's your insights that can help mediators suggest creative solutions that will benefit everyone involved. And that, again, makes you an indispensable part of the mediation and negotiation process. Approaching each professional with that understanding of their specific needs allows you to bring tailored solutions unique to that specific divorce that will enhance their work and benefit their clients. It's these partnerships that expand your network and create the long-term growth opportunities for your business. And I will also tell you, the family law industry is small. Once you do a good job, they will not hesitate to share you with other professionals in their network. It's an amazing space. But my point in this, conversation and the value that you bring is, don't assume that these professionals know everything about their field, and don't assume that they already know about how the mortgage works, how the real estate market is, and how that listing is going to go. Family law attorneys are not real estate attorneys, and they are not mortgage professionals. Financial advisors, again, they calculate things differently. Mediators are there to facilitate the conversation, not to provide subject matter expertise. There's a lot of opportunity with a lot of different moving parts here. So let's look at the specific value that you can bring to the divorce table. As a real estate professional working in divorce, your role extends far beyond traditional real estate transactions. The scope of your work is very critical, and it requires real estate expertise and the ability to navigate the complexities of the divorce proceedings. Traditionally, a real estate professional, you enter the divorce case once it's been decided that the marital home is going to be sold. This occurs typically more toward the end of the divorce process. However, in divorce cases, your involvement is about more than just listing a property for sale. You play a critical role in ensuring that all real estate matters are handled smoothly and fairly for both parties. Neutrality and impartiality are key. You serve both parties without bias, ensuring that real estate decisions are based on facts and the best interest of the divorcing homeowners, not personal preferences. It's this neutral stance that builds trust and allows you to remain a credible resource. Your role becomes even more important when real estate decisions involve court oversight and accountability. You have to maintain clear communication, you have to ensure transparency, and you have to be accountable for actions that align with legal rulings. Your work will often be subject to court orders, which means you too must comply with legal documentation, and you have to adhere to any guidelines that the court provides. It's not your traditional listing. Part of your role is also handling disputes between the parties. Divorce can create tension, and disagreements are going to arise regarding property values, buyouts, sale logistics, repairs, maintenance. Your ability to mediate these disputes and provide fair, informed solution can really ease the burden on both parties as well as yourself. You will be tasked with following court orders to the letter. This ensures that decisions, again, such as selling the home, are executed per the legal directives, ensuring the process remains on track for the timeline and legally compliant. Lastly, conflict resolution and dispute management are key components of your role. There's a lot of emotions, and with these emotions running high during divorce, disputes can derail real estate transactions. Your ability to manage and resolve these conflicts is what is going to keep the process moving forward, and is going to help both parties feel confident in their decisions. In the divorce landscape, your role as the real estate expert is not just about facilitating real estate transactions. It's about providing guidance, upholding neutrality, and ensuring a smooth, compliant process that, again, benefits everyone involved, even when you enter the process toward the final stages. And if you want to enter the settlement process earlier than most real estate professionals are called in to list the home, consider adding real estate mediation to your services. You then have an opportunity to be involved much earlier in the process, which gives you the opportunity to forge those strong alliances and build the relationships that you need. Mortgage professionals. As a mortgage professional working in divorce, your role goes far beyond simply originating a mortgage loan. Divorce mortgage planning involves crafting a strategic blueprint that ensures financial stability during and after the divorce. It's about looking ahead, understanding each party's financial future, not just one spouse. You have the opportunity to work with both. It's about creating solutions that fit within a divorce settlement's legal and financial framework. One of my favorite statements is this: what may be available as a legal option is not always a mortgage option. This is where your specialized expertise comes into play. You need to be comfortable working directly with the divorce team. Again, the attorneys, the mediators, the financial advisors, partners that are typically out of our normal transaction in our normal, list of partners that we work with. Because you have to be comfortable to identify potential red flags and even suggest strategic and creative solutions that may involve legal maneuvers, financial strategies, and even tax implications. For example, more and more divorces involve a lump sum settlement rather than monthly support income. A divorce mortgage planner needs to understand the legal strategies and solutions available to identify qualified income streams, while also being mindful of any tax implications that these maneuvers may create. Otherwise, you have a borrower that's got a very nice bank account but can't qualify for a mortgage because they don't have any income. You'll also play a key role in mediation and the collaborative process, helping, again, both parties understand how mortgage and financing decisions will impact their divorce agreement and their long-term financial security. Your input can significantly facilitate smoother negotiations for both parties, everybody involved. A critical part of your scope as the mortgage planner involves facilitating language, offering up language for the attorneys to include in the marital settlement agreement. The terms around property division, equity buyouts, mortgage qualification, those terms have to align with legal agreements and the practical realities of actually securing mortgage financing. These missteps can truly delay or completely derail the process. So it is your expertise that's essential to ensure everything is set up for a seamless transition. And when it comes to the final steps, you then ensure that everything is closed, that mortgage loan is closed in compliance with court orders, safeguarding both parties and meeting all legal and financial requirements. And also, unlike real estate professionals who, like I said, often enter the divorce process later when the house is ready to be sold, a mortgage professional trained in divorce is typically brought into the case very early in the process. They're brought in to facilitate negotiations and the settlements. It's your involvement from the start that allows you to help shape the financial direction of the case, offering, again, vital input that helps both parties reach an agreement. So remember that originating a mortgage loan is not the specialty here. Divorce mortgage planning has a much broader scope. It's about offering tailored strategic guidance to navigate many financial complexities of divorce. And again, ensuring both spouses have a stable financial future once it's all over. So let's just take a quick moment to explore how divorce mortgage planning differs from the role of a traditional mortgage loan originator and why this distinction matters. First, consider the primary focus and goal, all right? For an MLO, the primary objective is clear: to secure a mortgage. Their focus is on matching clients with loan products and navigating the approval process. And in contrast, a divorce mortgage planner shifts the focus to understanding the unique financial and legal complexities that are arising from this divorce case. It's their goal that goes beyond just securing a loan. It's about creating a sustainable mortgage plan that ensures financial stability for both parties well beyond the divorce process. And while many originators, they may be proficient in loan products, underwriting guidelines, and getting a deal closed, a divorce mortgage planner brings specialized expertise in family law, tax implications, title complexities, and long-term mortgage planning within the context of divorce. This is a crucial distinction between divorce, and it introduces the challenges that a traditional loan officer may not be equipped to address. A divorce mortgage planner, they offer a broader range of services. They perform in-depth financial analysis. They explore home equity solutions. They recommend tax optimization strategies. We don't give tax advice. We don't give legal advice, but that doesn't mean we can't recognize these tax red flags and then have the discussion with the appropriate parties. And we also collaborate with other divorce professionals to identify new revenue streams or opportunities that benefit the divorcing couple. And another key difference is the timeline and complexity of the process. All right. For an originator, the process is relatively straightforward. You're focused on loan approval and closing within a fixed time frame. Divorce mortgage planning is often more complex. It extends beyond the immediate settlement, with the plan potentially needing, adjustments and tweaks as you go along. Another key distinction is that a CDLP is often compensated up front for their knowledge, their expertise, and their planning, which ensures their work is valued and there's no conflict of interest. When appropriate, that CDLP can then also facilitate the mortgage loan as part of that comprehensive plan that they helped establish. This is an unmatched business strategy because oftentimes you put hours into helping strategize and provide solutions for divorcing clients, only for them to opt not to refinance or buy, especially when they already have a 3% 30-year fixed rate in place. So in short, while a traditional loan officer works within a defined transactional framework, a divorce mortgage planner offers a much more comprehensive approach. They address the unique challenges of divorce with an eye toward building a stronger financial future for both parties. Divorce mortgage planning is a business. It's not just a niche marketing effort. And it's really important that we recognize that difference. Let's talk mediation. Becoming a mediation specialist offers real estate and mortgage professionals a unique opportunity to broaden your skills and expand your scope of work even further. Mediation training goes beyond just helping in divorce cases. It enhances your ability to handle negotiations in a variety of situations, strengthening your overall professional expertise. Mortgage professionals, we negotiate rate, terms all day long. Real estate professionals, you're negotiating inspection issues, contract resolution. We're always negotiating. Think about how much better that can be if we understand the different techniques and what's really going on. But I will tell you that one key benefit of mediation training in the divorce space gives you the ability to provide mediation support. As a mediation specialist, you can work alongside other mediators who offer, additional expertise of their own, but many mediators, they will bring in the subject matter experts, you, the real estate and the mortgage professionals. It's your knowledge of specific property transactions or financing situations that can be invaluable in helping both parties reach equitable agreements, especially again during emotionally charged disputes. And another powerful role that you can step into is what's called evaluative mediation. In this capacity, you're facilitating the conversation and providing informed recommendations based on your deep understanding of property values, mortgage options, and financial strategies in divorce. This helps clients make more informed decisions, and your role as an expert enhances the quality of the overall mediation process. I'm not suggesting that you start mediating the divorces. You, as the real estate and the mortgage professional, can offer mediation support to the mediator that helps progress mediation on down the road so that they can reach resolution better. As a financial neutral, you also play a critical role in bringing clarity and balance to very complex financial discussions. So whether the dispute concerns property division or long-term financial planning, it's your ability to present unbiased factual information that leads to more successful outcomes. Mediation training gives you the tools to leverage your existing knowledge, whether again, real estate or mortgage, but it allows you to enhance those skills in all types of negotiations. And another significant advantage is that a mediation specialist, you may have the opportunity again to be compensated for your time during mediation. These professionals, they expect you to be paid for your time and your services. They still do not understand to this day how we could always provide services and not be compensated. They're blown away by that. And they love the fact that taking a neutral approach and you remove that conflict of interest of being commission-based, that you can be compensated as a member of the divorce team. All of that, whether you're trained in divorce real estate or you're trained in divorce mortgage planning, or you add mediation specialists to your toolbox, that adds respect and trust. So in short, becoming that real estate mediation specialist, it again just furthers your position as an indispensable resource. And I really believe that all of us, we have to see beyond our traditional little four walls of the real estate and the mortgage market. We offer so much more if we truly just embrace our knowledge and our expertise. In my 35 years in the industry, I've seen all of us constantly shift to keep up with changes. It's like we're all chameleons, just trying to survive this new roller coaster that we're on. Loan officers maneuver because of interest rates. Real estate maneuver, or professionals, they're maneuvering inventory, and now they're even managing and negotiating their own commissions due to the NAR settlement. But isn't it time to stop merely adapting to the ever-changing industry? Now's the time to lead the change. Be a change leader by exploring the opportunities in the divorce market from a professional perspective. So let's focus on growing our expertise in the divorce space and making a lasting impact on our divorcing clients and expanding our business as a business strategy for long-term sustainable growth. I am asked all the time, what training programs do we offer, do we recommend? Specialized training offers a powerful way to increase your marketability and your credibility in the divorce industry. And I will tell you, I get asked all the time, why do I need divorce mortgage training? Why do I need divorce real estate training? I already know how mortgages work. I understand how the real estate process works. I cannot tell you how much gray area exists beyond the traditional cycle of listing a house, due diligence, closing, or taking a loan app, going through operations, and closing the loan. That everybody knows. If you don't know how that works, you shouldn't even be on this webinar. But if you're truly interested in the divorce space, you have to understand the additional knowledge and just training that goes on behind that, not just for marketability and credibility, is to keep your own license out of hot water. All right. I highly recommend these three programs. If you want to create new opportunities within the divorce industry, these are the only ones I would recommend. I am not going into each one of them. You can do your research on them. The CDLP, the Certified Divorce Lending Professional certification, is offered through the Divorce Lending Association, and I will tell you, it is unmatched for mortgage professionals. If you want to expand your skills further, the REMS, the Real Estate Mediation Specialist certification, also with the Divorce Lending Association, it offers mediation training for both mortgage and real estate professionals, which can take your expertise and your marketing to the next level. I will tell you that for a limited time, we are offering a $200 discount on both the CDLP and the REMS certification. You can use coupon code DLA200 for both. You can find out more on these two programs at the Divorce Lending Association, divorcelendingassociation.com. And for real estate professionals who are looking for certification in the divorce space, you should only consider the CDRE, the Certified Divorce Real Estate Expert, which is offered by the Alumni Institute and Laurel Starks. Each program provides the knowledge and tools that you need to excel in the divorce market and truly elevate your business to new heights and new opportunities. So as we wrap up, I want to thank you again for exploring the incredible divorce real estate and mortgage industry opportunities. If you're ready to take the next step and dive deeper into how you can grow your expertise and business in this market, we'd welcome the opportunity to have a more personalized one-on-one conversation with you. To learn more, again, you can visit our website, divorcelendingassociation.com. There you can find more detailed information about our programs and schedule a strategy call with a member of our team. So I want to thank you again for your time. We look forward to the possibility of working with you as you explore, a new journey in the divorce space.